Good afternoon from Los Angeles. It's Alyssa Corum here with Chris Gessel, and we have a look at the stock market today. It's Tuesday, February 26th, and on today's show, we are diving into Etsy's post-earnings gap up. But before we get into that, let's take a look at the major indexes. So we did close slightly lower across the board right at the end of the session here. The major indexes tried to reverse higher, but couldn't hold on to those gains. So finishing the day slightly lower.
Yeah, we're still in this situation where we've been up a lot over the last few weeks, and it's not surprising that the market's gotten a little sluggish. We've had a few of these days where it's up slightly or down slightly, goes back and forth. You know, on the NASDAQ, now we're above the 200-day moving average, holding that pretty well. So the next big area of resistance would be near the old highs. The S&P, it's kind of interesting. I don't know if we have that chart available, but it's been getting resistance around 28.15 three times since October. And the most recent day was yesterday when the market was up and then reversed lower from that. So that's an area where it needs to get through, and then the next stop would be the old highs as well.
So yeah, some potential resistance levels still to watch, but overall, this uptrend that we've been seeing, more or less pretty unstoppable at this point. No really red flags so far.
Yeah, the distribution has been modest. We've only had I don't know, 1 or 2 days of selling, so that's okay. And then with the S&P, I mean, it's up 20% since the lows on the day after Christmas. A nice day after Christmas present that has kept on giving. So we'll continue to take it.
And then really quickly, before on this show, we've talked about growth maybe being a little bit out of favor. What's the pulse on that we're seeing today? I know in the IBD 50, MedPace weighed on that index, but what about growth stocks in general?
Well, in general, we've been seeing days where growth really does well. The market might be, just flat or down a little, and growth is showing really good gains. Today was one of those days where growth was a little out of favor, and so, but overall, growth stocks have been doing very well, and we've got a lot of new highs, a lot of leading stocks, new names coming out there, replacing the old names. I mean, who's even talking about the FANG stocks right now?
That's right. Yeah, we've seen a lot of stocks gapping up on their earnings reports, and we saw that with Etsy today, finishing the day up more than 16% in heavy volume here, but heading into the report, this one was a little bit tough to handle. We saw as an attempted breakout here earlier in the month that didn't really go too well. So, maybe if this was on your watch list and you got a little burned there, how should investors be approaching this new gap up that we're seeing?
Right. Well, and what you talk about is it's a real issue, because we have experience with Etsy on leaderboard. A year ago, we were on top of the world with it. Almost a year ago, when it broke out, we put it on, and we got as much as a 77% gain out of there. So it was one of our big winners for the year. It was very nice. Since then, we had tried it a couple times, and most recently was that breakout from about 3 weeks ago, where it looked beautiful, nice little cup with handle, breaking out in big volume, and then it started reversing. And as there was someone buying it at the open, and then someone else came in, some other mutual fund or hedge fund that was liquidating a position, and so it reversed all the way and actually went down to the 50-day.
Right.
And we took about an 8% loss on that for leaderboard. So I think that we were really feeling like, this stock is a little too volatile for us. We've had good experiences, but we've also had a couple negative experiences. So we opted to step back from it. However, if you were going to play it, there were a couple ways.
That's right. We have our gap up strategy and then the option strategy, and the premium was about 4.5%, so pretty manageable there.
Yeah, that was as of last week. So if you read our earnings preview column, we always have a list of stocks that are going to be reporting in the week. We highlight some of them that are near buy points and let you know what the risk is. And really all that comes down to is what is the cost of the option versus the price. And if it's in the 3 or 4% range, it's probably something that's worthwhile to go for.
Yeah, and as far as the gap up today, I mean, Etsy was really able to hold those gains and close right near the intraday high, so that's positive.
Yeah, absolutely. And if you're looking at a stock that's gapping out of a base, a breakaway gap that we call it, you want to see how it really starts the day, especially like that first 5-minute bar. And if it can close near the top of that 5-minute bar, you can pull the trigger there. In this case, Etsy was kind of in the lower half of that bar, but in the next few minutes, the second 5-minute bar, it took out the high, and around 66.50, that would have been a pretty good place to get in, and you'd be up on the day as well.
Yeah, and we did have a base reset that happened with the volatility that we saw last fall. So even though Etsy went on a pretty big run in 2018, looking at stocks that are breaking out of earlier stage bases is beneficial.
Yeah, absolutely. So it's a first stage base, and you know, sometimes a stock can pull back, undercut a recent base, and it's a first stage base, but it's not really a reset. But Etsy had been essentially consolidating since late June. So, you know, a good 6-7 months of consolidation before today's breakout. That's
right. And the personality of this stock, like you said, even though we had it on leaderboard in 2018, a little bit hard to handle here, some downside reversals even before what we saw earlier this month. So that's just something to keep in mind, is sort of the personality that you're seeing with these stocks. And then also, can you talk a little bit about how to handle IPOs, because Etsy's still a relatively young company, but looking at the early history of this stock, this is not something that you would have wanted to be touching for at least that first year or so.
Yeah, actually, that's absolutely true. So Etsy looked a lot like Facebook, where it was highly anticipated. It came public and immediately started correcting, and it started going down. And I think it took more than a year for it to form a base that you could buy and make some money off of. And then where we got it was the second base after that base. So it's just another lesson of do not buy IPOs on the first day. Let them consolidate for a few days. Hopefully they'll build an IPO base, and then you can jump on and go from there. But
and also don't write off stocks that didn't really perform well in their first year of trade, because we've seen that also happen as well. And then one more note on Etsy, we want to talk a little bit about the fund sponsorship, because that's something that we also like to point out in addition to the price and volume action and the fundamentals here. So we do have T. Rowe Price in there, but as far as those mutual funds who are holding their positions versus adding, what's kind of the picture there?
Well, that is not as clear. So I think there were 97 funds that opened new positions, and there were like 200 that reduced positions, and maybe only 150 or 160 that added to positions. So the point is there were more funds reducing their positions than adding, and that's always something that you'd prefer to see the other way. You want to see a lot of new funds going into the stock, as well as the existing owners adding shares, and in greater number than those reducing.
Right, something to keep an eye out for there, and we will be watching Etsy in the sessions to come to see how it performs. All right, everyone, thank you so much for watching, and we hope you subscribe to our notifications across social media so you can get alerts whenever we go on the air. We're coming to you live from Facebook, YouTube, and Twitter, Periscope. They're one and the other now. We also have a presence on Instagram, so make sure you're following and subscribing for the latest. And be sure to head to investors.com for all of our stock news and analysis. We'll see you tomorrow.